The United States owes more than $37.9 trillion, and it's adding over $25 billion every single day. That's faster than the rate at which money can even be printed. While the rest of the world fears a financial crisis, America keeps going, fueled not by production, but by debt creation. Welcome to the new economy. Made in debt. 1. The machine that runs on borrowed time. For decades, the U.S. has built its strength on one thing: confidence. Confidence that U.S. debt will always be repaid. Confidence that the dollar will always be strong. But behind the curtain, here's the truth. Every dollar of growth now depends on another dollar of debt. When the government spends more than it earns, it issues treasury bonds. Investors, from banks to pension funds to even stablecoin issuers like Tether, buy them. And that borrowed money becomes the fuel that keeps the machine alive. It's not a circle of growth, it's a loop of dependency. 2. The endless loop. Here's how it works. The U.S. issues bonds to borrow money. The Federal Reserve or foreign buyers purchase those bonds. That money is used to pay old debts and fund new spending. As old bonds mature, new ones replace them, at higher interest rates. It's a perpetual debt machine, and the only way to keep it running is to print more money or borrow more. The numbers that don't lie. Let's put this in perspective. The U.S. debt hit $37.9 trillion in 2025. In 2000, it was only $5 trillion. In 2010, it doubled to $13 trillion. By 2020, it hit $27 trillion. It's now rising faster than ever before. Every 1% increase in interest rates costs the U.S. government hundreds of billions in extra payments. This means America isn't borrowing to grow, it's borrowing to survive. 4. The economic illusion. When a country borrows endlessly, it creates the illusion of prosperity. GDP grows, but not because productivity improves. It grows because spending increases. The stock market hits new highs. Housing prices skyrocket. People feel richer. But behind that illusion lies a harsh reality. Every boom is built on borrowed time and borrowed money. 5. The hidden risk. So what happens when the debt spiral continues unchecked? First, interest payments explode. America now spends more on interest than it does on defense. Second, confidence weakens. Foreign countries like China, Japan, and Saudi Arabia are slowly reducing their U.S. bond holdings. Third, the dollar's dominance faces new challengers: BRICS nations, digital currencies, and gold-backed trade. When the world stops trusting U.S. debt, the world stops trusting the dollar. 6. The inflation trap. When the government can't tax enough or borrow enough, there's only one option left: print. Printing money doesn't erase debt. It transfers the burden to the people through inflation. Prices rise, savings lose value, and the middle class quietly pays the price. That's why inflation is called the invisible tax. It doesn't show up on your paycheck, but it takes away your future. 7. What if the cycle breaks? If the debt keeps rising and investors lose faith, the system starts to crack. Bond yields spike, the stock market falls, the Fed is forced to choose: save the dollar by raising rates or save the economy by printing again. Either choice leads to pain, inflation, or recession, and both lead to the same destination: reset. 8. The made-in-debt paradox. Here's the paradox. America prints money to pay debt. Then it issues new debt to replace the money it printed. Even Tether, the largest stablecoin company, uses U.S. debt as collateral. That means the crypto market itself now depends on America's borrowing. So, in a surreal twist, fake money, USDT, is buying real debt, which funds real spending that produces more fake stability. A loop so fragile, it only survives as long as people believe in it. 9. The turning point. Every empire eventually reaches a moment when debt outweighs trust. Rome did. Spain did. Britain did. And now, the United States stands on that same edge. It won't collapse overnight. But over time, the cracks widen until confidence is replaced by doubt. And once trust is gone, no amount of money can buy it back. 10. Conclusion. Debt used to be a tool. Now it's the foundation. And when the foundation itself is debt, what happens when the world stops believing? Maybe the next crisis won't be about profit, but about trust. Because when money is made from debt, collapse isn't a possibility. It's a matter of time. This is JP Finance.